Most Canadians don't lose money through one huge mistake. They lose it slowly, quietly, and consistently, without even noticing. Rising fees, inflation, high-interest debt, subscription spending, taxes, housing costs, and everyday financial habits are draining thousands of dollars over time in ways that feel normal, because everyone around them is experiencing the same thing. The problem is that these small losses compound year after year, making it harder to save, invest, or build real financial stability even for people with decent incomes. Today we will talk about how Canadians are losing thousands without realizing it, so before we get started, make sure to hit that like button. Also subscribe to my channel. 10. Most financial losses don't feel like losses at first. When people think about losing money, they usually imagine dramatic events, bad investments, scams, business failures, or sudden emergencies. But for many Canadians, the biggest financial losses are happening quietly in the background every single month. Small increases in costs, hidden financial habits, rising interest payments, inflation, and inefficient systems slowly drain thousands of dollars over time, without creating immediate alarm. Because the losses happen gradually, most people adapt instead of noticing how much wealth is actually disappearing from their future. 9. Inflation quietly reduces purchasing power every year. One of the biggest hidden financial losses in Canada is inflation. Prices for groceries, housing, transportation, insurance, and everyday essentials have steadily increased. But many salaries have not kept pace. Even when income rises slightly, purchasing power often declines in real terms. This means people may technically earn more money than before, while still becoming financially weaker over time. Inflation acts like a silent tax, because it slowly reduces what money can actually buy without appearing directly on a bill. 8. High housing costs are consuming future wealth. Housing is now one of the largest financial pressures facing Canadians. Whether renting or owning, many people spend enormous portions of their income on shelter. The hidden problem is opportunity cost. Money flowing heavily toward rent, mortgage interest, property taxes, and housing expenses is money that cannot be invested elsewhere. Over decades, this creates massive differences in long-term wealth accumulation. Many Canadians are not just paying for housing, they are sacrificing future financial growth without fully realizing the scale of the trade-off. 7. Lifestyle inflation keeps expanding monthly expenses. Another silent financial drain is lifestyle inflation. As income rises, expenses often rise alongside it. Better phones, newer cars, subscription services, dining out, delivery apps, upgraded housing, and convenience spending slowly become normal. Individually, many of these expenses feel harmless, but combined over years, they quietly absorb thousands of dollars that could have been saved or invested. The danger is not one large purchase. It is the accumulation of small recurring expenses becoming permanent parts of daily life. 6. Consumer debt is quietly compounding against people. Credit card debt, financing plans, car loans, and personal debt create another major hidden wealth drain. Many Canadians focus only on whether monthly payments feel manageable instead of calculating the long-term interest being paid. Interest compounds quietly over time, transferring large amounts of future income toward financial institutions. The longer high-interest debt remains active, the larger the invisible financial loss becomes. People often underestimate how expensive convenience financing truly is over many years. 5. Low financial literacy creates expensive mistakes. Another overlooked issue is financial education. Many Canadians were never properly taught investing, taxes, compounding, debt management, or long-term financial planning. As a result, people often make decisions based on short-term comfort instead of long-term optimization. Delaying investing, holding too much idle cash, misunderstanding debt, or avoiding financial planning entirely can quietly cost enormous amounts over decades. Small knowledge gaps compound financially, just like investments do. 4. Taxes and fees quietly add up everywhere. Many people underestimate how much money disappears through taxes, fees, and hidden costs. Banking fees, subscription renewals, insurance increases, transaction charges, service fees, and taxes on nearly every purchase quietly drain income over time. Individually, these costs often feel small enough to ignore, but collectively, they create a significant financial burden. Modern financial systems are filled with recurring micro-costs that slowly erode disposable income without attracting much attention. 3. Canadians are losing time, not just money. One hidden financial loss people rarely discuss is time. Long commutes caused by expensive housing markets, overtime work needed to keep up with costs, and constant financial stress all consume personal freedom. Many Canadians spend years trapped in survival cycles, where all income goes toward maintaining existing obligations instead of building future flexibility. The result is not only financial exhaustion, but reduced time for health, relationships, creativity, and personal growth. 2. The biggest loss is missed compounding. Perhaps the most expensive hidden cost is missed opportunity. Money not invested early loses decades of potential compounding growth. Even relatively small amounts invested consistently over time can grow significantly. But rising costs, debt pressure, and financial uncertainty often delay investing for many Canadians. The longer people wait to build assets, the harder catching up becomes later. This creates invisible long-term wealth gaps that may not become obvious until decades have passed. 1. The real problem. The system slowly normalizes financial erosion. The deeper issue is that many financial losses happen so gradually they become normalized. Higher prices feel normal. Rising rent feels expected. Debt payments feel routine. Subscription costs feel unavoidable. Because the system changes slowly, people adapt psychologically instead of questioning how much money is quietly leaving their future. Wealth erosion rarely feels dramatic, it feels ordinary. Because the truth is simple. Many Canadians are not losing money through one catastrophic mistake, they are losing thousands slowly, through systems, habits, and rising costs that quietly compound over time. And once you understand that financial loss often happens invisibly rather than dramatically, you start paying attention not only to how much money you earn, but to how much quietly escapes your future every single month. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.